We are covering these 8 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on RGTI. Rigetti Computing Incorporated is one of those quantum computing companies that doesn't always get the flashy headlines, but it's quietly positioning itself as a serious player in the space. Unlike some of the more speculative names in the industry, Rigetti isn't just chasing theoretical breakthroughs. It's already operating real quantum computers over the cloud, serving enterprise, government, and research clients. What makes them stand out? They build their own superconducting qubit chips in-house at their Fab 1 facility, giving them control over their technology stack in a way that not many others in the space can claim. The stock jumped 8.71% today, and there's a clear reason behind the excitement. The broader quantum computing industry is shifting toward hybrid quantum classical computing, where quantum processors work alongside classical high-performance computing to solve complex problems more efficiently. And while NVIDIA has been a dominant force in AI, it's now making waves in the quantum world by pushing this hybrid computing model as the future of the industry. That's big news for Rigetti, which is already structured for this hybrid approach. NVIDIA CEO Jensen Huang made headlines earlier this year when he suggested that useful quantum computers were still 15 to 30 years away. That initially sent quantum stocks tumbling, with companies like Rigetti, IONQ, and D-Wave taking a hit. But the story didn't end there. NVIDIA quickly pivoted and doubled down on its role in the quantum space, not by building quantum processors themselves, but by ensuring that its AI and GPU hardware would be central to the hybrid systems that will dominate the next decade. At NVIDIA's recent GTC conference, the company hosted its first ever Quantum Day, bringing together industry leaders, including Rigetti, to align on this hybrid future. Rigetti responded by rebranding its 9-qubit Naver chip as a tool for hybrid research, making sure it stayed relevant in this new ecosystem. The company's presence at NVIDIA's event signaled to investors that it's not just surviving in the quantum space. It's actively positioning itself alongside the biggest names in the game. That's one of the reasons analysts remain bullish on Rigetti, with a strong buy rating and price targets suggesting nearly 90% upside. The quantum industry is still in its early stages, but the companies that successfully integrate with high-performance classical computing will likely have the best shot at commercial viability. Of course, there are still challenges. Quantum computing is a long-term play, and the industry has seen plenty of hype cycles before. But with NVIDIA putting its weight behind hybrid quantum classical computing, and Rigetti aligning itself within that ecosystem, today's rally might not just be a one-day event. If the company continues to execute and demonstrate real-world applications for its technology, this could be the start of something bigger. Our review on UWMC. UWM Holdings Corporation isn't your typical mortgage lender. It's a wholesale powerhouse. Unlike big banks that deal directly with borrowers, UWM operates through independent mortgage brokers, making it the largest player in the U.S. mortgage market by closed loan volume. Its tech-driven platform, Ease, streamlines the loan process, helping brokers close deals faster and more efficiently. That's the secret sauce that keeps UWM ahead of the competition. Today, the stock popped 8.22%, and the latest executive shakeup could be a key reason why. UWM just appointed Rami Hassani as its new CFO, effective April 1st, 2025. Hassani isn't new to the company. He's been around since 2020, but now he's stepping into a bigger role, overseeing the company's financial strategy at a time when the mortgage industry is gearing up for a potential boom. Meanwhile, outgoing CFO Andrew Habacker will transition into a senior advisor role. This isn't just a title change. Hassani's promotion comes with a pay bump, a bigger bonus, and a long-term incentive plan that includes a one-time stock award worth $1 million. But here's the interesting part. Those stock units won't fully vest for 7 years. That kind of long-term structure signals confidence in both Hassani's leadership and the company's future. UWM has been vocal about using technology to stay ahead in a competitive mortgage landscape. With interest rate fluctuations and a possible rebound in home buying, the company's positioning matters. A strong CFO who understands both finance and strategy is crucial for navigating whatever comes next. Investors seem to like the move, given today's rally. Now, the real question is how Hassani will steer UWM through an evolving mortgage market. If home buying demand picks up and UWM continues leaning into its tech advantage, this stock could have more room to run. Our review on IONQ. IONQ Incorporated is making some serious waves in the quantum computing world, and investors are taking notice. This company is right at the forefront of a technological revolution, building quantum computers that are designed to solve problems traditional computers simply can't handle. We're talking about high-performance systems like the IONQ Forte and the newly commissioned IONQ Forte Enterprise, machines that push the boundaries of what's possible. And now, IONQ just made a major announcement that has the market buzzing. Its latest quantum computer is officially available through Amazon's cloud platform, AWS Braket. That news sent IONQ's stock soaring today, jumping over 8% as investors reacted to what this means for the company's future. If you've been following quantum computing, you know accessibility is key. These systems are incredibly powerful, but without widespread adoption, they remain more of an academic curiosity than a commercial breakthrough. That's why this move is such a big deal. By making its quantum computers available through Amazon Braket, IONQ is opening the doors for more companies, developers, and researchers to start experimenting with quantum applications. This marks the third IONQ system to get the green light for AWS Braket, which is significant because Amazon sets a high bar for commercial availability. Forte Enterprise now joins IONQ Aria and the original Forte on the list of quantum machines that businesses can tap into through Amazon's cloud infrastructure. And for IONQ, that's a huge validation of their technology. It's not just about building quantum computers. It's about making them useful, practical, and accessible for real-world applications. IONQ's CEO, Niccolo De Masi, made it clear that this is all about getting quantum computing into the hands of developers. The more people who can use this technology, the faster we'll see real breakthroughs in fields like pharmaceuticals, finance, manufacturing, and even artificial intelligence. Imagine a future where quantum computing helps design new drugs, optimize complex financial models, or revolutionize supply chains. That's the long-term vision, and IONQ is working to make it a reality. Of course, we're still in the early days. Quantum computing is a field filled with promise, but it hasn't yet reached mass adoption. There are plenty of skeptics who argue that these machines still have a long way to go before they become truly indispensable. That's a fair point. There's always a risk when investing in emerging technologies. But what's happening right now with IONQ is exactly what you'd want to see from a company trying to push this field forward. Real technological advancements, major cloud partnerships, and a growing customer base. For investors, IONQ remains a high-risk, high-reward play. The stock has been volatile, as is typical for companies working on cutting-edge tech. But today's jump shows the kind of excitement that can build when a company like this takes meaningful steps toward commercialization. If IONQ can keep executing, growing its partnerships, and proving that quantum computing is more than just hype, it has the potential to be a game changer. Days like today are a reminder of why quantum computing stocks have investors paying close attention. It's not just about what's happening now, but what could be coming next. Our review on CLF. Cleveland Cliffs Incorporated is catching a lot of attention today, with its stock surging 7.78%. The main factor behind this move? A significant jump in short interest. Currently, 58.28 million shares are sold short, which represents 15.11% of the total float. This level of short interest suggests a lot of traders are betting against the stock, which always sets the stage for potential volatility. In fact, based on trading volume, it would take about 2.29 days for those traders to cover their positions. This sets up the possibility for a short squeeze, where a rally forces short sellers to buy back shares to minimize their losses, further pushing the stock price higher. So, what's fueling this bearish sentiment towards Cleveland-Cliffs? A lot of it likely comes from concerns over the steel market, especially in sectors like automotive manufacturing. There's been a lot of talk about supply chain issues, potential slowdowns in production, and shifting demand trends, all of which could impact steel producers like Cleveland-Cliffs. But here's where things get interesting. Cleveland-Cliffs is not your typical steel company. With its vertically integrated operations from mining iron or all the way through to producing finished steel, Cleveland-Cliffs has an edge when it comes to cost control and pricing power. This integration allows it to weather fluctuations in the market more effectively than many competitors. The company also holds long-term contracts with major players in the automotive industry, which gives it a steady source of revenue. That kind of stability in demand is crucial when market conditions are uncertain. Despite the overall pressure on the industry, Cleveland-Cliffs has been able to maintain a relatively strong position, especially as the demand for high-quality, value-added steel products remains high. Now, with all this short interest, any positive movement could trigger a short squeeze, sending the stock even higher. If Cleveland-Cliffs continues to execute well and the steel market holds steady or improves, those betting against it could find themselves in a difficult spot. On the flip side, if there's a downturn in the economy or a slowdown in steel demand, short sellers might start to feel validated. As it stands, the next few months could be very telling for Cleveland-Cliffs. With all these factors at play, this stock is definitely one to watch. Our review on NBIS. Nebius Group NV, a Netherlands-based player in the tech infrastructure world, is quickly becoming a key name to watch. With a focus on artificial intelligence, Nebius is diving deep into developing full-stack infrastructure, from GPU clusters to cloud platforms, specifically built to support AI workloads. Their portfolio includes some interesting sub-brands, like Toloka AI, 1010 and Avride, each contributing to the growing global AI ecosystem. The company is positioning itself as a crucial bridge between AI technology and the infrastructure needed to support it. So, why is Nebius drawing attention today? Well, it's tied to a broader move in the tech world, particularly with NVIDIA's recent strategic shifts. NVIDIA has been making some big moves in the cloud space, including investing in neo-cloud companies like CoreWeave and Nebius itself. Now, this may seem like a side note in NVIDIA's overall story, but it's significant because it shows NVIDIA's strategy of diversifying its customer base beyond the big three cloud players, Meta, Amazon, and Microsoft. Instead of just relying on these giants, NVIDIA is creating a more fragmented and less centralized market by investing in up-and-coming cloud services like Nebius. This move is paying off because it opens up new channels for NVIDIA to push more GPUs into the market, without giving too much control to any one customer. But what does this mean for Nebius? This investment could be a game changer. By aligning itself with NVIDIA, Nebius is stepping into a lucrative space that's only going to grow. The AI and cloud markets are massive, and as more companies scramble to integrate AI into their operations, the demand for infrastructure that can handle these complex workloads is exploding. Nebius is right at the heart of this trend, offering the kind of infrastructure that companies will need to scale their AI efforts. If the AI boom continues at the pace it's predicted to, Nebius stands to benefit massively, not just from its relationship with NVIDIA, but from the growing demand for its AI-focused services. Today, the stock has jumped 7.76%, likely reflecting investor optimism about the company's future, especially with its strong ties to NVIDIA. While there's still a long road ahead for Nebius in terms of market growth and proving its value in the competitive AI infrastructure space, this partnership is definitely something investors should keep an eye on. With NVIDIA's backing and a booming AI industry, Nebius might just be one to watch closely in the coming years. Our review on NBIS. Geron Corporation is one of those biopharma companies that investors have had their eyes on for a while, especially because of its promising work in oncology. The company's leading drug, imetelstat, is a telomerase inhibitor that could be a real game changer in the treatment of hematologic malignancies, specifically targeting conditions like myelodysplastic syndromes and myelofibrosis. It's in late-stage clinical trials, with multiple studies ongoing that could shape the future of cancer treatments. Today, Geron stock is up by 7.43%, and the movement seems to be a reflection of investors' optimism around its progress in these critical trials. The company has a couple of pivotal Phase 3 and Phase 1 trials underway, one in relapsed/refractory myelofibrosis, MF, with overall survival as the primary endpoint, and another in first-line MF, which could really make or break the drug's prospects. The Phase 3 IMPACT-MF trial in particular has got a lot of attention because it could provide much-needed data on how imetelstat performs when patients have exhausted other options. If it shows promise, Geron could be positioning itself for a significant breakthrough in a market where new, effective treatments are in high demand. It's important to remember, though, that drug development is never without its risks. Even with today's gain, there's still a lot of uncertainty. These trials take time, and there's always the potential for setbacks. But for investors with a higher risk tolerance, Geron's clinical updates and potential in the oncology space make it a stock worth watching closely. If imetelstat continues to show positive results, Geron could be in for a very strong future, and today's stock jump might just be the start of something bigger. Our review on CIFR. Cipher Mining Inc. is a company that's deeply embedded in the world of Bitcoin mining. They're developing and running some significant mining data centers, mainly in Texas, and are making big moves in a growing industry. Right now, they've got an active portfolio of facilities, and they're working on expanding even further. Their Odessa facility, which is a massive 207 megawatts operation in Texas, is already up and running, and they've got additional sites in the pipeline that could bring their total capacity to 2.6 gigawatts across 11 sites, once everything is up and running. Today, Cipher stock is up by 7.72%, which is catching the eye of a lot of investors. So what's behind the move? Well, there could be a couple of factors at play. Bitcoin prices, for one, have been seeing some upward movement recently, which can give a boost to mining companies like Cipher. The more Bitcoin is worth, the more profitable mining becomes. Also, with the expansion they're pushing forward, investors might be excited about the company's growth potential and its ability to scale in a market that's showing increasing demand for crypto mining. As far as risk goes, it's still tied to Bitcoin's volatility and the regulatory environment around crypto. But if you're watching this space and looking for exposure to the infrastructure side of Bitcoin mining, Cipher Mining's growth story could be one to follow. With that steady stream of capacity expansion and its solid position in the Texas mining scene, this could be a company that sees more gains if things keep moving in the right direction. So, today's uptick might just be a sign of more momentum to come. Our review on RDFN. Redfin Corporation is a technology-driven player in the real estate game, offering a range of services from helping people buy and sell homes to providing mortgage, title insurance, and rental services. They're all about using tech to make the home buying and renting process smoother and faster, with features like on-demand tours and quick mortgage closings. Their reach spans around 100 markets across the US and Canada, helping customers find homes and connect with services easily. Today, Redfin stock is up by 7%, which has investors paying attention. So what's driving this move? Given the nature of their business, Redfin's performance can often be tied to trends in the housing market. With interest rates fluctuating and people's home buying habits shifting, the demand for both real estate services and mortgages can swing a lot. A rise like this might be an indication that investors are feeling optimistic about Redfin's position in the market right now. Plus, Redfin has been doubling down on its tech, making it easier for buyers and sellers to navigate the process. The real estate sector can be volatile, but with their strong tech infrastructure and broad service offerings, Redfin is well placed to capture more market share, especially if demand in the housing market picks up again. While housing market conditions are always a bit unpredictable, today's 7% jump seems to show investor confidence in Redfin's ability to handle whatever's thrown its way, using both its tech and its established market presence. Definitely one to keep an eye on if you're looking for a tech-powered real estate player. Please subscribe, give the video a like, and watch more from our playlist. Thanks.